Everybody is everybody out there ready for some free money? How about those employers who were goodly enough to pay their people all the way through the pandemic and beyond? You are going to get rewarded by the IRS for doing this in the way of some free money. And what I'm talking about is the employee retention tax credit. Came to us from 2020 in the heat of the pandemic, and it's contrary to public perception, it is still around. There's some like serious confusion among business owners about the qualifications and what's required in order to get this free check. So this little session here that I'm doing is way overdue, but it's I've had so many people really begging me to do something about clearing up the confusion here that I've finally given in, and we'll talk about the employee retention tax credit here today. I'm Travis Watkins. This is Travis Watkins Tax is the name of my firm, and we're seeing some huge checks come in for clients on the employee retention tax credit, ERTC as I'll call it. And you probably, whether you know it or not, as a business owner, qualify for this. Let's talk a little bit about the ERTC. First and foremost, this thing is much like PPP, the Paycheck Protection Program, to the extent that you've got to have employees in order to take this type of credit. So independent contractors, 1099 folks, this isn't for you. This is solely for those employers who have actual wage earning people. Now, the PPP, I should point out, they did include some independent contractors in that thing, but this is not that. This is only for employers of wage earning W-2 employees. Okay, so no independent contractors. As I mentioned, there's lots of money that's out here right now. The initial dispatch of this money was $400 billion. And to put that in perspective, the first round of PPP was 500 billion, just 100 billion more, and that money went in 120 days. So within 120 days, that feeding frenzy resulted in that whole fund being depleted. It was added to the PPP project program was. And as many of you know, there was a second iteration of PPP. This one's the 400 billion is still there. In fact, as of about 4 months ago, which is the last thing that I could find any information about, as of about 4 months ago, only about 5% of that 400 billion had been used. So lots and lots of money still out there to get, although like any government handout program, it's subject to change overnight, and you got to get it while the getting's good. You got to take advantage of it. Although there's not that feeding frenzy type of atmosphere here right now, a lot of employers don't even know that it's out there or don't even know what it is. And the reason for that is because it's changed so many times over the course of the last 2 years that you may have looked at it before or not known about it. You may have looked at it though and determined that you weren't a candidate for ERC, and so you just kind of brushed it to the side. The history of this thing is worth going through because it kind of clears up that confusion. First of all, when it first started out, there was 100 employee maximum. Now that employee maximum is 500. It used to be credits, like the name says, employee retention tax credit. It used to be credits. It used to be advances on your payroll and payroll taxes. Now it's much simpler. The time periods The window of evaluation of these things, that being 2020 and 2021, are obviously now over. And so now all we're talking about is actual rebate money. That means real money, not a credit, not an advance. It's real money. It's a real check, and you're going to be getting that if you qualify. All right. Big confusion, the old version versus the new version, because when it first came out, they said you couldn't get both kinds. You couldn't get PPP and ERC. They were, in other words, mutually exclusive. If you took one, you couldn't take the other. Not that way anymore. You can now have taken PPP rounds 1 and or 2 and still get the ERC credit, which is a great, huge advancement. There used to be different amounts that you could get on this. It used to be 50% of an employee's wages up to a certain amount. Now you can get up to 70% of the employee's wages up to a maximum of $26,000 per employee. So that's a big change as well. That caused a little bit of confusion. The old versus the new. There, I think maybe the biggest one, the one that threw the most people off, it threw me off when I was doing this for myself, was the 7200 form. There used to be an IRS form on irs.gov's website where you fill out the questionnaire and go through each one of those things. And that's where you requested your ERC money. If you go to irs.gov now and search 7200 form, what you're going to get is like essentially like a, what do they call it, a 404 type error that says don't come here anymore for this application because it's not there. Some historical version, the old version, might be on there. Don't use that. And a lot of people saw that, and some people, some professionals are still saying you got to fill out a 7200 form. There's really no such thing as a 7200 form anymore, and that's probably a good thing because 7200 was kind of a mess over at the IRS, and they are a mess over there right now because of well, things that everybody's going through as far as labor force and shortages and whatnot. But they were returning a fair amount of these 7200 forms. For instance, if you filled out a 7200 form in I don't know, in 2021, sometime, let's say in June, and then it was still pending in November, they would send that back to you if there was a change in the 7200 form and say, hey, you didn't send it in on the right 7200 form. Well, yeah, you did months earlier. They changed it along the way. So much simpler, more streamlined process now. It's just that there's a lot of confusion here, and we'll clear those things up. Now you find everything on an IRS 941 X 7200 form is gone. Okay. So let's jump right into the qualifications for obtaining a ERTC or ERC rebate now. Okay. The way that I like to separate this in my mind, and you should separate it this way too, there's really like two separate columns here, two separate silos or buckets, so to speak. The first one is the sheer qualifications that you need in order to be a qualified employer to get the credit. And used to be two things there that you could jump into the ERC. Now there are three. There are three things that can automatically qualify you, or the quarters rather, to receive the credit. And here's what they are. They've always been full or partial mandate for shutdown. In other words, there was some federal, state, city, local ordinance or law saying thou shalt go home and not not be open for business. That's the very obvious thing where ERC kicks in. So full or partial shutdown is the big one. So a lot of bars, restaurants, gyms, salons, those types of folks that were complete shutdowns for sometimes many months. Those are complete shoo-ins. Those quarters that you were shut down are automatically qualified. So you're in. Second type of hurdle that has been there, although it's changed somewhat, is that requirement that you have some actual gross business receipt losses in some quarter of 2020 or 2021 compared to that same quarter in 2019. Okay, so if you had a loss in 2020, let's say in quarter two, compared to that Q2 of 2019, the number there that you're looking at, the percentage, it has to be 50% decrease or loss in gross business revenue over that quarter in 2020 versus 2019 to qualify. And each quarter that qualified for, 2020 versus 2019, so long as you show 50% decrease there, that quarter is going to be in. There's some subsequent legislation that came along that also confused people. When it came to 2021, it got better. You can now show a reduction in gross receipts for 2021 as it relates to that same quarter in 2019, but it only has to be a 20% reduction. So 2020, got to show 50% or more in some quarter. 2021, you only have to show 20%. Okay, so that's the second type of qualification in order to fit that quarter into an ERC tax credit. Let's see, the third type of qualification, and this one's relatively new, and this is the one I think that is huge because a lot of people don't know about it, and it kind of snuck in there on us just recently, in fact. And that third qualification would be, did you experience some type of a disruption in your supply chain? And quite honestly, what industry didn't? Not only supplies, vendors, materials, all those types of things that you generally think of. This requirement, I think, is squishy enough to fit in just about anything. And that would be the example that I've seen is like a attorney's office. Let's say that they didn't get as many clients because the courthouse was shut down during that period of time. Or just, in general, people were not, suing one another or whatever the case may be. There's a supply chain disruption can take many forms. Just know that it's pretty broad. So really that requirement, if you fit that requirement, you don't have to show full or partial shutdown or this reduction in gross receipts versus 2019. If you can show a clear supply chain disruption, then you're in. Well, the nice things now, you can mix and match those different things, the full or partial shutdown, the gross receipt reduction, or the supply chain disruption requirements. One quarter might qualify for one type and another quarter might not qualify for that same type, but another type. So you can mix and match these to get your up to your $26,000 per employee in this particular silo, that being the requirements, the qualifications to get in general. Okay, moving from that first silo onto this second silo, which is, I call it's how much do I get silo, and that's the pure formulas for figuring out what you're going to get from the ERC. Now, the changes allow for up to 70% of a qualified employee's wages, benefits that show up on each quarterly 941. Okay, so up to 70% of what that employee has made during the quarter or quarters up to a maximum of $26,000. The caveat to that, the exemption to that, unfortunately, you can't take you can't take the employer owner himself or herself into consideration in that calculation. It also disqualifies anyone who is familially related to that owner. So knocks out the owner from the calculation, also knocks out the owner's family that may have been employed during the quarter in question. So really, that's it. So you'd be looking at the 941 for that quarter and figuring out what part of that relates to employee pay for those non-owners, non-family members. All right, and kind of in a nutshell, that's the deal. And we're seeing huge numbers coming off of these tax credits and these calculations. So much so that, I mean, there's really not been any pushback from the IRS. When we come up with a 941X, that's the form now that you file. It's really the only form that needs to be filed. Not much pushback from the IRS at all on that. Once we get that calculated, that's pretty much what you can expect in a few months to get when you get an actual check. All right. Here's a couple of FAQs that we've seen coming through on this, frequently asked questions. The first one is, do I have to repay this money? Does the check, are there strings attached to it? And the answer to that is no. There's no strings attached. This is really not even as prohibitive as PPP. This is a rebate. This is replenishing you for and rewarding you for having kept employees at a really difficult time in America, and so no repayment is necessary. The other question that we get on this a fair amount, is it taxable? And the answer to that is also no. This is not a taxable event for you. The money coming in is not taxable, although there may be some ramifications to old returns as it relates to credits, or rather expenses that the business has taken for payroll either in 2020 or 2021. I've already mentioned it, but another frequently asked question we get here: do I still qualify even if I received one or more payments from the Paycheck Protection Program? And the answer to that is also no. However, you can't use in your calculations to get the ERC, you can't use any money from PPP that you had already received for a given quarter. Remember, there was a certain time limit there for PPP. I think it was 8 weeks, 2 months essentially, that you had to spend that PPP money on payroll or utilities, rent, etc. You can't use any of that you used for payroll forgiveness, PPP forgiveness in your ERC calculation. That, just to remind you also, some employers we were all given a longer period than just that first 8 weeks. It went up all the way to, I believe, 180 days. So watch out for that in the calculation there as well. So lots of little pitfalls here. The form itself is no great shakes, 941X, but you will it will help you, I think, to use some tax professional to get this thing done. And you might consider using us because we've done quite a few of these things now, and we know what we're into. We've got the streamlined processes here, and it's going to save you a lot of time and aggravation, I think, to use a tax professional in this process. If you want to use us, as always, you can go to traviswatkins.com. We have a tab there on the front page Relating to the ERTC, the Employee Retention Tax Credit, or you can also call 866-927-1962. And if you're going to be using a tax professional, which I highly recommend that you do, I would also recommend that you use one that at least in some form charges according to some type of a contingency. In other words, they don't get paid until you get paid, sort of arrangement. Even if that's a hybrid situation, some tax professionals are charging some amount for the processing of these things, and then taking that off of the bill, so to speak, once the employer has received, once you have received your ERTC check. So do that at least in some hybrid type of arrangement, and that way you're not out so much out of pocket to grab this free money while it's still available. Like I mentioned, it's only available for the time that it's up there hanging out. Unknown if the federal government will extend this any further as far as funding is concerned. It's all one omnibus bill to the next as it relates to budgetary constraints of the federal government. All right. That number again is 866-927-1962. I really appreciate you looking at this. And if you've got questions, give us a call about this thing. We'd really love to help you. Thanks.